Well, one of the clues is the big amount of volume that went through. The last couple of sessions, we've seen anemic volumes going through the Aussie market, just $3 billion worth of stock being traded. But today we've managed to get to that $4 billion mark. And usually the marginal buyer or seller on the Aussie market tends to be overseas fund. I noticed that John Noonan's probably the man to be asking, because he sent around a note earlier this afternoon saying that US custodial funds has been strong interest in Australian equities, as well as in Hong Kong, Greece, Canadian, as well as Chinese equities. So it does look like some overseas buying coming into the Aussie share market and helping us to perform. That's despite the poor lead from the US, with its fourth consecutive day of losses over in the US market, and some phenomenal performances. Once again, we've seen 52-week highs by the likes of Kathmandu, Challenger Group, as well as Brickworks, to name a few. On the other side, though, Kathmandu, while it's a retailer, it's been doing well. On the other side, Oriton's another retailer that hasn't been doing so well. This stock reaching a 52-week low today. But all up, we saw an impressive performance from the consumer staples sector. In fact, Woolies up by 2.1%. The energy sector was also a standout. We saw oil search up a massive 3.4%. It does look like a presentation to CLSA there. And we saw the industrial sector also doing well, and SIG managing a gain of 3.1%. So good volumes, great performance by the Australian market, and it's good to see us finally outperforming
today. Julia, kicking off with David Jones. In the end, it closed up 4.9%. But look, honestly, looking through it, why? I mean, this was not a result that I would have thought justifies an almost 5% jump in its share price.
Only one reason there, that's short covering, and 10.5% of David Jones's stock is short sold. And of course, we short sellers, the first transaction they do is selling the stock, and at a later date they buy it back, hopefully at a lower price, and they make a profit that way. So they sell high as the first transaction and then buy low as the second transaction. So short covering, seeing David Jones's shares bouncing quite high today. And of course, a lot of the retailers are very highly short covered stocks, and David Jones certainly is one of them. In terms of the underlying profit, we saw a flat result, and if we have a look at that result, $101.6 million, that's not a bad result, given that we know that sales have been under pressure. Total sales down by 1.2%, like-for-like sales down by 2.9%. The great thing is that we did see gross margins increasing, so the gross profit margin was up by 80 basis points, and we also saw the closing inventory down by 9.9%. So we're seeing some of that inventory being eaten away, and that's a positive sign. Also looking at some of the structural challenges, and David Jones slowly starting to make a little bit of a headway there. It looks like sales through the internet at about 1% of sales, and that compares to 0.2% in the previous corresponding period. Also, if we have a look at those sales made through the internet, it does look like buyers spend about 3 times more in one transaction through the internet than compared to when they go in the store. So that's a good signal as well, and I think the market like that. If you're buying a stock like David Jones, you're buying it because you think there's going to be an increase in traffic and an increase in spending, and certainly we have started to see some good signs in terms of consumer confidence, and hopefully that's going to translate into more traffic and more spending down the track. David Jones's stock, though, it's taken off since June, and the stock price has run very hard. Today, another good day, but really the reason behind that would be short covering.